President Trump made a decisive move in the ongoing trade war. In a bold and unprecedented step, he announced a series of new economic measures aimed squarely at China. This move was seen as a significant escalation in the already tense relations between the two countries. Tariffs were paused on goods from nearly every nation. This strategic decision was intended to isolate China economically, putting pressure on Beijing to make concessions. The global community watched with bated breath, understanding the potential ramifications of such a targeted approach. However, China remained firmly in the crosshairs. The focus on Chinese imports was not just about trade imbalances but also about intellectual property rights, technology transfers, and broader geopolitical strategies. The administration's stance was clear: China had to play by the rules or face severe economic consequences. This decision signaled a renewed focus on the complex economic relationship between the two global superpowers. The intricate web of trade, investment, and diplomacy between the US and China meant that any action taken by one would inevitably ripple across the global economy. With tariffs exceeding 100% on a multitude of Chinese imports, the US has taken a firm stance. These tariffs were designed to protect American industries and jobs, but they also risked increasing costs for American consumers and businesses. China, in turn, has retaliated with tariffs of its own, targeting American goods. This tit-for-tat strategy has led to increased prices and uncertainty for businesses on both sides of the Pacific. The Chinese government has also sought to find alternative markets and suppliers to mitigate the impact of US tariffs. This escalating back and forth has created a climate of uncertainty and tension in the global market. Investors and businesses worldwide are grappling with the potential long-term effects of this trade war. Stock markets have shown increased volatility, and global supply chains are being re-evaluated. The world waits to see what the ultimate cost of this trade war will be. Will it lead to a new era of economic cooperation, or will it deepen the divide between the world's two largest economies? Only time will tell, but the stakes have never been higher. The current trade war is not an isolated incident. It is in fact a chapter in a long and complex history of economic and political interactions between the United States and China. These tensions have been brewing for decades, influenced by a myriad of factors including economic policies, political ideologies, and global market dynamics, but rather the culmination of years of simmering tensions. The roots of these tensions can be traced back to the late 20th century when China began to emerge as a global economic powerhouse. As China's economy grew, so did its trade surplus with the United States, leading to increasing concerns in Washington about the trade imbalance. Since Trump's first term, tariffs have been a recurring tool used to address the trade imbalance between the two nations. The Trump administration's aggressive stance on trade with China marked a significant shift in U.S. policy, with tariffs being imposed on hundreds of billions of dollars worth of Chinese goods. This move was aimed at pressuring China to change its trade practices, which the U.S. deemed unfair. The Biden administration continued this policy, further escalating the conflict. While there were hopes that the new administration might take a different approach, the reality has been a continuation of the hardline stance. The Biden administration has maintained many of the tariffs imposed by its predecessor and has also sought to address other issues such as intellectual property theft and forced technology transfers. Despite efforts to reduce reliance on Chinese imports, the U.S. still finds itself intertwined with the Asian giant's economy. American consumers and businesses have become accustomed to the availability of affordable Chinese goods, and disentangling these economic ties is proving to be a complex and challenging task. While the U.S. has seen a decrease in its reliance on Chinese imports from 21% in 2016 to 13% in 2023, the sheer volume of trade remains significant. This reduction is a testament to the efforts made to diversify supply chains and reduce dependency, but it also highlights the ongoing challenges in achieving complete economic independence from China. The complex history of U.S.-China trade relations underscores the deep interdependence of the two economies, making disentanglement a daunting task. The future of this relationship will likely continue to be shaped by a combination of cooperation and competition, as both nations navigate the intricacies of global trade and economic policy. Understanding this history is crucial for comprehending the current state of affairs and anticipating future developments in U.S.-China trade relations. The impact of the trade war is felt most keenly in the rising prices of everyday goods. American consumers face higher costs for a range of products, from electronics and computers to toys and batteries. Apple, heavily reliant on Chinese manufacturing, has seen its share price plummet by 20% in recent months. On the other side of the Pacific, Chinese consumers are grappling with increased prices for American goods like soybeans, pharmaceuticals, and petroleum. The tariffs have created a ripple effect, impacting businesses and consumers alike. Both economies are feeling the strain, with no clear winner in sight. The trade war has become a high-stakes chess match, with both countries strategically maneuvering for advantage. China, holding a strong position in the global supply chain for vital industrial metals like copper, lithium, germanium, and gallium, could restrict exports to the U.S. Such a move would have significant repercussions for American manufacturing and technology sectors. The U.S., in turn, might tighten its technological blockade, particularly concerning advanced microchips, further hindering China's technological ambitions. As each side considers its next move, the stakes continue to rise. The trade war's impact extends far beyond the borders of the United States and China. As the two largest economies in the world clash, the ripple effects are felt across the globe. Countries are scrambling to adapt to the new economic landscape, with many fearing the long-term consequences of this escalating conflict. Other nations are watching anxiously and taking steps to mitigate the fallout. Governments and businesses alike are holding emergency meetings to strategize and find ways to protect their economies. Economic analysts are closely monitoring the situation, trying to predict the next moves and their potential impacts. The European Union, along with Vietnam, India, and Indonesia, is forming a coalition to counter U.S. tariffs. These countries are negotiating new trade deals and strengthening existing partnerships to create a united front against the economic pressures imposed by the United States. This coalition aims to stabilize their economies and ensure continued growth despite the challenges. Turkey, with its lower tariffs and record exports, feels more insulated from the immediate impact. The country is leveraging its strategic position and robust export sector to maintain economic stability. Turkish businesses are exploring new markets and diversifying their trade routes to reduce dependency on any single economy. South Korea is leveraging its shipbuilding industry in negotiations, using its advanced technology and skilled workforce as bargaining chips. The country is also seeking to expand its influence in the global maritime industry, aiming to secure new contracts and strengthen its economic position. While India, despite concerns, benefits from a narrower trade surplus with the United States. Indian officials are working tirelessly to negotiate favorable terms and protect their growing economy. The country is also looking to boost its domestic industries and reduce reliance on imports, fostering a more self-sufficient economic model. Canada has imposed retaliatory tariffs on U.S.-made vehicles. The Canadian government is taking a firm stance, aiming to protect its automotive industry and workers. These measures are part of a broader strategy to defend national interests and maintain economic stability in the face of external pressures. The global trade ecosystem is adjusting to the new reality, seeking to minimize damage and find new opportunities. Countries are re-evaluating their trade policies, exploring new alliances, and investing in emerging markets. The goal is to create a more resilient and adaptable global economy that can withstand future shocks and continue to thrive. The escalating trade war has sent shockwaves through the global economy. Market volatility in the United States is on the rise, with mortgage rates climbing to 6.85%. The Japanese yen has strengthened, while Asian currencies like the Korean won and Indonesian rupiah have weakened. The Bank of England warns of heightened market risks and uncertainty surrounding global growth and inflation. Deutsche Bank has downgraded its target prices for 19 European companies. These indicators paint a picture of a global economy grappling with the consequences of the trade war. Back in the United States, the trade war has become a political battleground. A bipartisan bill seeking to grant Congress greater control over President Trump's tariff decisions highlights the growing unease with the administration's approach. Senators from both sides of the aisle have voiced concerns about the efficacy of the tariff strategy. The trade war has become yet another divisive issue in an already polarized political landscape. The future of the U.S.-China trade war remains uncertain. Will the tariffs achieve their intended goals, or will they ultimately harm both economies? Will the conflict escalate further, or will cooler heads prevail, leading to a negotiated settlement? The answers to these questions have profound implications for the global economy and the future of U.S.-China relations.